All right, y'all. In this session, we're going to be talking about something called divergences. Now, divergences, this is the bread and butter of my trading. As we've already gone through putting everything together and making a trading plan, now we're talking about indicators, the thing that's actually going to tell us whether or not to enter a trade. Divergences, pretty much for me, is that one thing that tells me, yes, take this trade with good risk management, or no, don't take this trade, wait for something else. Okay, now I'm going to go over exactly what a divergence is, the different types of divergences, and then I'm actually going to show you guys content that I've previously uploaded to YouTube that goes over various different trading strategies surrounding divergences that you can start implementing right away. And I have a great feeling that after you watch and internalize the content I'm about to show you, you'll have a really, really good idea of what you should be looking for at key levels of support and resistance. So make sure to like the video, subscribe to the channel, click the bell for notifications because we are bringing you this 100% free course. And we got to give a major shout out to our sponsor, Antarctic Exchange, the best trading experience in the world. This is a decentralized exchange made by traders for traders. And what sets this apart is, first of all, this is a decentralized exchange, meaning 100% self-custody of all your assets. You're not depositing your money into another company's wallet or platform. You're keeping everything self-custody in your own cold wallet or hot wallet. And because you're doing that, that means it will never ever require KYC or know your customer. The best part about Antarctic Exchange is ownership. All traders on Antarctic will get a portion of the trading fees that the exchange makes. And there's also an opportunity for you, the trader, to be the market maker and provide liquidity to the exchange. And in return, you will receive a proportionate amount of the market maker profits, including liquidation fees. Now, this has never been done before. Instead of your typical centralized exchange where everybody's trading against the market maker, and let's be honest, the market makers are the one who always win in the end. We are fellow traders trading against fellow traders, providing liquidity to each other, and it evens the playing field. Now, if you sign up in the link in the pinned comment and description, you will get the lowest fees, period, on any exchange right now that I know of. 0% limit order fees, 0.01% market order fees. This is a great deal on fees. It makes scalping on low time frames absolutely amazing because you can market in, market out, and make big profits on small moves. So make sure right now to go sign up to Antarctic Exchange. Links are in the pinned comment and description. I'll see you over there. All right, so first of all, what is a divergence? A divergence is where the oscillator is diverging from the price action. What I mean by that is this. If we are in a downtrend and the price is making lower lows and lower highs in a downtrend like this, but our oscillator, which also should be getting lower with the price, all of a sudden starts to get higher, make a higher low, as the price is making a lower low. This is what's known as a bullish divergence. A bullish divergence is where the price is getting lower, but the oscillator, which is supposed to tell us the relative strength of the move, is showing us that strength is coming back into the market, even though the price continues to get lower. The oscillator is diverging from the price action, and this is a very strong and powerful reversal signal. Bullish divergence equals price gets lower, price makes a lower low, oscillator makes a higher high, makes a higher low. Did I just Hitler low? I mean higher low. All right, this is what a bullish divergence looks like here on the chart. All right, now what's a bearish divergence? A bearish divergence is where price is in an uptrend, making higher highs and higher lows like this, and then your oscillator is making higher highs, and then all of a sudden it makes a lower high. That is called a bearish divergence. All right, a bearish divergence is when price makes a higher high and the oscillator makes a lower high. All right, now again, the way you can visualize this is the price is getting higher, the price keeps going up, yet the oscillator, which is telling us the relative strength of this market right now, is getting lower. that means the price is not matching up with what is actually happening within the market participants buying and selling. The only reason price is this high is maybe because of FOMO or maybe because of a short squeeze. There's not really the money coming in to support that move. And just like the bullish divergence, price is dumping, but maybe there's probably not sellers coming in to support that move. Sellers are probably exhausted, and maybe stop losses are getting triggered, causing a long squeeze, longs getting wrecked, pushing price down. But this move down is very weak, and this can be seen by the strength coming back in on the oscillator. So go ahead and take a screenshot of this right here so that you can see a bullish divergence and a bearish divergence. Again, a bullish divergence, price is making lower lows, oscillator makes higher lows. A bearish divergence, price makes higher highs, oscillator makes a lower high. This is a standard bullish and bearish divergence. And now let's go over some actual examples where this happened on the chart. All right, let's talk about a bullish divergence. Now, this is the Ethereum price right here. The Ethereum price came down to this very key box of support. All right, we have a macro value area low that goes all the way back to the bear market. We have the macro Fibonacci 786, and we have very important stop hunt liquidity underneath these lows. All right, so we have this box marked out as key support on our chart. Now, when we go to the 4-hour time frame here and we zoom in, look at what we see. As the price is getting lower, making lower lows, like we see right here, the oscillator is making a higher low, right? Now, something very, very important here, and this applies specifically to Market Cipher, but I want to just point out the fact that our money flow on Market Cipher is also making a higher low. Whenever you see the money flow and the momentum waves on Market Cipher both diverging with what the price is doing, very, very powerful indication of a reversal. Extremely powerful. You might see a divergence without the money flow happening, and that's okay. But if the money flow and those momentum waves are both diverging, extremely powerful. And then to add a third layer onto this, if the yellow oscillator also, this VWAP oscillator, is diverging, where we're actually seeing the volume coming in stronger to the upside, even though price is getting lower, and the money flow is coming in, money's coming into the market while the price is getting lower, and the momentum is getting higher in the market as the price is getting lower. This is a very, very powerful reversal signal. And of course, this did mark the bottom of the move on Ethereum. Now let's take a look at a bearish divergence on Ethereum. All right, we come up to the top here, where basically we had the stop hunt from these previous highs. We had a weekly level from the previous bull market. We had the 786 Fibonacci, so we mark out this box of resistance. And we can see here, as the price is making higher highs right here, we can see the oscillator is making a lower high. Okay, very, very powerful indicator. Now, if we go to our 4-hour time frame as well, and we zoom out to when that happened here, because I was just showing you on the weekly time frame, look at this. All right, come up here. This is our 4-hour time frame, and it's a little bit difficult to see here on our 4-hour time frame because it's very so slight. But as the price is making this one last high, we are technically seeing, if we take from the top of this momentum wave to the top of this one, a divergence, and the money flow also getting much lower as the price is getting lower. And also we can see here this yellow oscillator is getting lower as the price is getting higher. This is a bearish divergence. Okay, so learn to recognize these things. Again, this doesn't only apply to Market Cipher. We can turn on the awesome oscillator and see the same thing here, right? We can see the same thing here. As the price is getting higher, the oscillator is getting lower. That's giving us our bearish divergence right there, okay? And as we come down to the low for ETH, same deal with the awesome oscillator. As the price is getting lower into our key support, let's see, actually, hang on, I gotta refresh our screen. Here we go. We are seeing this bullish divergence here. Now, I want to talk about, you'll hear people say the divergence is confirmed or it's unconfirmed. What does this mean? Basically, a divergence is confirmed when a candle closes and on Market Cipher, a green dot is now printed forever. Green dots and red dots on Market Cipher they are not going to stay on the chart forever. They might appear and disappear until that candle closes. This green dot confirmed. If this purple candle had come all the way down to make a lower low, this green dot would not have stayed on the chart forever. It would have just, this red dot would have continued down. So once the candle closes, the 4-hour chart, and this dot is now confirmed, and we're now in the next candle, which would be this one right here, right? That means it's confirmed. The same is true with the awesome oscillator. That's what I like about the awesome oscillator is once this green bar, the candle closes on that 4-hour candle, now it's officially confirmed that we've crossed from the red into the green. Okay, so when you hear people say we have a confirmed divergence, it means the candle has closed. We're onto the next candle, and this dot is now forever on the chart, or this first green bar after the red bars is now forever on the chart. Okay, a confirmation of a divergence, especially on a higher time frame, is a very strong signal that we're going to get continued upside. For example, once we confirm it on market cipher on this candle, all right, we get that big move. The next candle is when we confirm it on the awesome oscillator, and of course we still are pretty much in for that big move to the upside. A lot of times when I'm looking at price action, when I'm looking at my oscillator, I'm not necessarily waiting for a confirmation to happen. Instead, what I'm just looking for is price hitting, number one, a key level? If the answer is yes, price is hitting a key level. And number two, the price is, the oscillator is giving a divergence. For me, that's good enough. That's good enough. And we're going to get into more of this in this session where I'm playing you old content that I have on my YouTube channel already, but I'm going to re-upload it so you can see it all in one place without having to go back in time. So these are basic divergences. Now I want to talk about something called hidden divergences. Okay, now I just want to point out something to you. A regular divergence is a reversal pattern. When we're looking for a regular divergence, we're looking for the price to change direction, right? Because what's happening is we're in a downtrend, for example here, and we're making lower lows and lower highs, right? And that divergence marks the time where we start making higher highs and higher lows, right? Just like also how the bearish divergence, we're making higher highs and higher lows in an uptrend, and then the bearish divergence marks that reversal, okay? So a regular divergence is a reversal pattern. Now I want to talk about something called a hidden divergence. A hidden divergence is a continuation pattern in a trend, okay? What is a hidden divergence? A hidden divergence is when you're in a clear uptrend that is making higher highs and higher lows, as we are right here. A hidden divergence is when the oscillator is actually making a lower low as the price is making a higher low in an uptrend. This is a continuation pattern that's showing you, because remember, what characterizes an uptrend? Up a lot, down a little. Up a lot, down a little. Up a lot, down a little. The hidden bullish divergence is going to tell you when the down a little is over and the up a lot is about to start again. Here's what it looks like. When you begin, you know, and this is all kind of like fractal stuff, meaning like you're going to see within these larger trends this pattern happen on smaller and smaller time frames. But basically, this is our weekly time frame. We have our macro weekly bullish divergence here, which marks the bottom of the bear market pretty much. Well, we can't say pretty much every time, but in this case, it marked the bottom of the bear market. Okay, we have that first trend change officially putting us into bullish market structure. Then we come back down here to tap into what is the start of this trend line. Now remember, at this point, the trend line does not exist yet. We get a trigger wave on market cipher B. A trigger wave simply means after you print a really deep wave, any higher wave is called a trigger wave. And oftentimes, I'd say 90% of the time, after you get a regular bullish divergence on the oscillator, that next momentum wave that prints below the zero line is going to give you your next big impulse to the upside. Now what this does is this allows us to establish a trend line marking these two lows together. And then if we continue this trend line to the upside, now when we come over here to that third tap, notice this. The oscillator makes a lower low. When the price makes a higher low on a trend line and the oscillator makes a lower low, this is called a hidden bullish divergence. It's basically showing you that this macro uptrend is going to continue. and this local downtrend, which exists in the macro uptrend. Like, notice this. This macro uptrend is characterized by uptrend local, downtrend local, uptrend local, downtrend local, right? The big uptrend of up a lot, down a little. The down a little, if you were to zoom in on, let's say, like a 4-hour time frame, this looks like a downtrend, right? And so the hidden bullish divergence is telling you when that local downtrend is going to end and that next big impulse is going to happen. You can think of it as like throwing a rock from the top of a roof onto the trampoline that gets a nice big stretch and then boom, a big bounce. You're throwing the rock down from the roof onto the trampoline, and then boom, it gives us that next big push to the upside. Now, as long as that momentum continues to get lower as we hit into the trend line, that is a hidden bullish divergence. We confirmed another one over here in the middle of April 2025. And when we confirmed that hidden bullish divergence, I was publicly extremely bullish. And from the time that that dot confirmed, we did get a move to the upside on Bitcoin of about 25%. Now, a hidden bullish divergence is a little bit dangerous because think about this. What is the oscillator really telling us? It's telling us the strength of the move. So if the momentum is getting lower, it's telling us the move is weak, right? So how do we know if this is actually going to be an actual bottom or something like this, let's say a green dot that printed on the weekly that just ended up dumping us down more? The way we're going to test a hidden bullish divergence is by looking for regular divergences on lower time frames. Because remember, a regular divergence is a reversal pattern. So if this is a true continuation pattern, we are going to see reversal patterns happening here on the lower time frames. The weekly time frame, hidden bullish divergence. Let's go down to maybe, let's say, the 2-day time frame. What do we see on the 2-day time frame? As the weekly time frame is printing as the weekly time frame is printing that continuation pattern, saying the down a little is over and it's time for up a lot again. What is the local downtrend showing us here on the 2-day time frame? The local downtrend is showing us as the price is getting lower to that trend line, the momentum is getting higher. All right. This is telling us the high time frames are saying macro uptrend is about to continue. Lower time frames are saying local downtrend is about to reverse to an uptrend. Okay. And now what we can do is we can wait because we've printed this divergence here, which means the next time the oscillator comes down and prints a wave below the zero line, that's going to be our next big move to the upside. All right. So like a good example of that was right here. We had our bullish divergence on our 2-day time frame along with our weekly divergence. That next trigger wave we printed below the zero line gave us that big impulse up. And when we get the money flow cross as well and the green dot, big impulse up. And we can see right here the money flow is crossing, which means that next green dot we print here on Market Cipher B is also going to give us that next big push to the upside. All right, now I know this could be a lot of information to take in. If you have to rewatch it. But the two things I really want you to get into your mind is that a regular divergence is a reversal pattern, and a hidden divergence is a continuation pattern. And if you're trading with the trend like this, when you see a macro time frame like the weekly and monthly giving you a hidden bullish divergence, and then the lower time frames like the 2-day and the daily giving you a regular divergence, that is a very high probability that the price is going to pump. Okay. Now this concept works on any time frame. For example, the 1-hour time frame, let's say, gives you a hidden bullish divergence, and then the 10-minute time frame gives you a regular bullish divergence, right? This is something called the hidden regular strategy, where you're looking for hidden divergences on higher time frames to continue a trend upwards, and low time frame divergences on the small time frames to show the reversal of a very local downtrend. Now, again, if you're using Market Cipher, I want to highlight that the money flow is really going to be key here. This is the Bitcoin price. The last short that actually we took on Bitcoin in the Casper crew is from here. That was actually the macro 886 Fibonacci confluence with a weekly level. So this is a very key level that we had marked out in our chart. All right. Look at Market Cipher B. As we tap into that level, the momentum wave and the money flow is getting lower, giving us that divergence. All right. Now, one last thing I want to say about divergences is this. Only worry about divergences when price is at your key level. Don't forget everything we've gone through so far in this course. We've gone through everything, including coming to a blank chart and making your trading plan in order to basically set up your ideas for the day. Once you come up with your plan, you do not look at your indicator until price comes to your level. Because look at this. All day, you could have gotten chopped up by saying, ooh, bearish divergence here. Ooh, bearish divergence here, right? And if you're a scalper, then by all means, scalp, scalp, scalp. But the only substantial move, if you're like a day trader and not a scalper, that gave you any real thing here, was when we actually hit into our key level. This is why it's so important to do your analysis first and plan out your risk management first so that you have an idea of what you're looking for, right? In this case, what happens here? We have ourselves a, we pull the fib from the local low to the high. Let's see, where did we, I hit a TP1 on this. I did it live. I guess it was, yeah, I mean, pretty much right into the golden pocket, the 786. We had this liquidity right here. All right, we took that liquidity. And this gives us right here, if we're looking for a short from this area, when we see that rejection, this gives us a really good risk to reward ratio, where if we're coming down to the 618 or right between the 618 and the 786, it's a 4-to-1 risk reward. We don't have to worry about getting chopped up trying to short before price hits our level. Okay, we have a 1% stop loss. We're going for a 4% move. It's a 4-to-1 risk reward if you take the whole trade out. This is what you need to do first. And then when price comes up to your level and you get the alert, price is coming to my level, hopefully you're at the computer because this one happened fast. You look, do I see bearish divergence? If the answer is yes, then you can go ahead and take the trade. And in this case, we saw multiple drives, money flow getting lower over time, momentum waves coming down over time. This is what you would want to look for a trade. Okay, so now what I'm going to do is I'm going to play some older videos here of basically different strategies that I use to scalp, to take higher term time frame trades, and basically just going over different scenarios on how I'm actually looking at Market Cipher in different market contexts to take trades. And then after this, we're going to go over a little bit of order flow, a little bit of cumulative volume delta and CVD, so we can talk about bullish and bearish absorption and divergences on the actual order flow. This is the trading strategy that I did use just recently to get into both of these trades. In the VIP Discord, I actually gave the signal and told everybody I'm in this short right now, and I gave the reasons why. Hint, hint, right here. This is what we're going to be going over. And when I saw that signal, I told everyone I am short. And I was confident to tell everyone I was short, even though when I posted it, the trade was in the red. And then, of course, the next morning, I woke up to a beautiful profit. Okay, and also the long trade right here. Although I didn't enter this trade based on this strategy I'm going to show you, in hindsight, we could have entered based on that strategy. This was also a signal I did give in the VIP Discord live stream, which I do every Monday for Bitcoin and Ethereum, where we look for swing trades. And sometimes right there on stream, we see the setup right there. What is the strategy? It's essentially this, guys. It's essentially this. You're going to need two things for this strategy, and I should make that clear. The first thing you are going to need is you are going to need to have a paid TradingView account. Why? Because I'm going to be using the 12-minute time frame. The 12-minute time frame. And a lot of people are like, Jason, why do you use the 12-minute time frame? The truth is, guys, it's because the 12-minute time frame, there's something very special about it. And I don't know why. I have my theories, but it's a very good time frame to trade with. So if you don't see the 12-minute time frame on your paid TradingView account, you have to come over here to the drop down. This is the time drop down right here. Scroll to the bottom, you'll be able to add a custom time frame. Okay. The second thing you will need is the indicator called Market Cipher. Now, I know a lot of people out there are using Market Cipher ripoffs, but it is very important for this strategy you use the real Market Cipher, because we are going to be looking a lot at the money flow, and the money flow has not been duplicated in the ripoffs. not even close to it. So that is the caveat before we get into this, okay? You can proceed however you want to after you get this information. I'm just letting you know real market cipher will give you much more accurate signals. So what we are going to do is simply, we are going to be looking for divergences in momentum and money flow on the 12-minute time frame. What do I mean by that? Well, if we go back here, we can see that when I entered the short trade, price was getting higher, coming up to a level, we'll get to that later, and momentum and money flow were both getting lower as the price was getting higher. This is known as a divergence. A divergence is when price and the oscillator do the opposite thing. Okay, now notice there's two things that we're looking at here. We're looking at the money flow and we're looking at these momentum waves. And just to highlight what I am looking at here, I'm going to turn on Market Cipher. I'm going to turn off basically everything right here except for the money flow. Except for that money flow. And then I'm going to load up another Market Cipher B indicator here. And I'm going to turn everything off except the momentum waves. And this way we have a very, very clear, very clear what we're looking at here, right? Because Market Cipher can be a little complicated. So to sum everything up, what we want to see is as the price is getting higher. So what we want to do is we want to take one of these dots, the red dot, and we want to take that and we want to draw a trend line to see that price indeed has gotten higher from that point. And then we want to take a trend line and see that the money flow has gotten lower. And we also want to take a trend line and see that the momentum waves on the oscillator have also gotten lower on Market Cipher B. When we see these two things together, this is an entry signal, okay? It's very, very high win rate. Again, I've used this to short the top and long the bottom multiple times. And I've even done it, and you have to understand, when you see this stuff happen, right, you might not be convinced that price is going to move. Okay, I actually entered this short. Immediately I was in drawdown, and it took a long time for the trade to play out. And eventually it finally did. I hit a take profit one, let the rest ride, and then eventually, look at this, boom, we get that drop. It's very rare that the money flow and the momentum will be coming down on the 12-minute time frame as the price is getting higher, and we don't see some kind of dramatic drop. That's actually very rare. Look at what happened last night. Price made this massive high pump. Money flow was coming down. Momentum was coming down. What this tells us is that although the price is pumping, money is actually leaving the market. And how can that be, you ask? Well, it's because large players in the market are building short positions and they want to short from higher. And so they are getting retail traders to FOMO long on this pump by pushing the price up there. And as the price is pumping, large players are filling their short orders, right? They're filling their short orders. And so we can see the money is leaving the market because the bigger players are filling their shorts. And then we get that drastic reaction from where price drops, okay? And if we see the money flow and the momentum waves together coming down, that is a very, very accurate signal. So we're going to go and just back test a few times recently where this happened, because we could have caught all the major pivots, not all, in the last few weeks, but many of the major pivots in the past few weeks just by using this simple strategy. And it seems too good to be true, guys, but I'm telling you, I have used this strategy for a long time and it does really, really well. Now, first of all, this is the trade. These are the trades that I was looking at here. But let's start up here, okay? Let's start up here. The short from right here. This is also a trade setup that I did give in the VIP Discord. If we go over here, let's see. Where was that one? We do take a lot of trades right here. This was the potential setup I gave, right? Look at this. I was looking to come above 44.9 and then drop. Why? Because money flow and momentum on the 12-minute time frame was getting lower and lower and lower. as we were in this range, and I was looking for that divergence to play out. We wouldn't have gotten the divergence until we came above that previous high. That's why I wanted to come above that high. What happens? We came above the previous high right here. What's the previous high? Boop. We came above it. Look at this. Look at the 12-minute money flow right here. 12-minute money flow coming down. Okay. Also, 12-minute momentum waves coming down. Okay. As we are putting in that high, that final high, look at the money flow. It's actually literally crossing into the purple. And the momentum waves are getting lower and lower and lower and lower as time goes on. Right? A beautiful short position. Beautiful. Absolutely beautiful. We totally dropped from there. Hit a take profit one, nice and easy. And, you know, it's not a surprise that we dropped from there. Okay? Now, just as a little caveat, this strategy is just one strategy out of a lot of tools that every trader should have in their toolbox. I recommend if you're newer to trading, you should focus on these simple strategies. This strategy I'm showing you here is just one tool in the toolbox, right? It's just one tool in the toolbox. And so basically, look at that. We took the short all the way to down here. Okay, once we come to the bottom, notice this. Okay, notice this. We get price coming down like this. Let's actually make our indicators larger here so we can really see how accurate these signals are. Okay, look at this. Price is right here, and it's making a lower low. And money flow is coming up, but notice the momentum waves are not coming up. In fact, the momentum waves are getting lower, and this is giving us a no-go signal. Then what happens is price makes another lower low. Money flow is still coming higher as we make that lower low. And this time we absolutely do see the momentum waves on market Cipher be getting higher as well. And look at this, a perfect entry right here for a move, even if we had a late entry, a move of 4.3%. Okay, now look at this. We come down to make an even lower low, and this time it's the exact bottom. What's happening to money flow? Literally getting higher, crossing over into the blue. Okay, now when we're looking at money flow, guys, we want to be looking at this as an entire entity, right? We want to see that over time, every time the money flow waves come lower, come below that zero line, that they're getting higher and higher and higher every time. And also we want to see over time that the blue waves are also starting to get higher. So this is very clear here. Both the purple and the blue are starting to get higher. I usually look at the bottom side if I'm looking to long and the top side if I'm looking to short. And the momentum waves are giving us our divergence right over here, like this. And boom, look at that beautiful long trade that we could have taken all the way to the top here, right? All the way to the top right here. Beautiful. Absolutely beautiful. And then once we get to the top, check this out, guys. Check this out. It's almost, you wouldn't believe it if I just told you. So I'm going to show you. All right, we come to the top, and what happens? Price making a higher high right here. Okay, this is where price is making our higher high. Hang on. Let's get our trend line out. Let's expand the price so we can really see in detail what's happening here. Price has peaked out and made its highest high right about here at the top of that purple wick. And we can see that the price is getting higher. And we can see that the money flow is getting lower, much lower. The more drastic that money flow, the better. And we can even see that the momentum waves over time are getting lower. And that's the top, guys. That is the top. And then look at that. Look, we've longed the bottom and shorted the top using this strategy. These setups are not going to happen every time, but they do happen, okay? Now, let's talk about, because people are going to say, well, Jason, you're just talking about the ones that worked out really well. That's true, but there is never a time, I shouldn't say never, there is rarely a time where you are going to have money flow and momentum coming down on the 12-minute and it doesn't work out. So this one here, we can see that we also did have the money flow coming down, and we also did have the divergence right here, right? And if you had taken this short, you know, it's like, well, you still would have had, even if we didn't enter right at the beginning of that, you could have still had like a 1 to 1.5% move, which is wonderful for a scalp. Definitely not a loss on a 1% move. And then other than that, we don't really have any other divergences really. This one wouldn't have counted because the money flow was getting higher. You could have taken a little short there. And then we dump all the way down, all the way down to the bottom, to the ground, right? And now look at this. Look at this. Would we have taken a trade right here? Well, what's happening? We are getting bullish divergences on the 12-minute time frame as we come to this bottom here. Actually, let's probably say that this would have been definitely a more complicated one to enter, guys, because the green dot doesn't start printing until right here. So let's just say we probably wouldn't have entered this one, but in hindsight, we can see that the money flow was getting much higher as we put in that wick to the bottom, and the momentum waves were also diverging. But this one obviously would have been a little bit more difficult to trade. It really would have been more difficult to trade. And then we come down to the real bottom here, and here we would not have taken this trade, right? We would have missed this bottom using the strategy because of the fact that although we did clearly have our money flow diverging, we did not have, oh, I'm wrong. Look at this, guys. Look at this. The exact bottom. Clearly, we have the momentum waves getting higher, and we have the money flow getting higher as we come down to that bottom. Boom, long it right from the bottom. I mean, this is pretty powerful. And the thing is, this is not going to happen unless we come to a significant higher low. It's really not going to happen unless we come to a significant higher low. Where over here do we see that happening, right? Where do we see the money flow and the momentum getting higher? Right here, right? Money flow is getting lower, right? Money flow is getting lower. So using this strategy, we wouldn't take a trade here. We could have used the 12-minute divergence to get into a scalp trade, but the big moves will always happen when the money flow and the momentum align, okay? Now here, no trade because the momentum waves did not align, even though the money flow did align. And then look at this. Look at this. We come up to the top of this move, and what do we have right here? We have the money flow getting much, much lower as we have the momentum waves also getting lower. And boom, that's wonderful right there. A beautiful short trade. And then look at this. Would you even look at this? Would you look at it, guys? Would you even look at this? We've got the price making a lower low. We've got the money flow making a higher low. And we've got the, actually, this is not a signal. I'm sorry, I got a little ahead of myself there. No, this would not have been a signal here, unfortunately. Not on this time frame, but that was still a trade, actually. This trade, actually, I did give in the VIP Discord. Shout out to everybody who took that trade yesterday. Let's see. Yeah, right here. Right here. I gave that setup from the from that golden pocket, and we came up from there. But whatever, man, I missed it. I've been missing trades lately because I've been sleeping, okay? And then, of course, we went over just the most recent one, this beautiful, beautiful short from up here. As the money flow is getting lower, the momentum waves are getting lower. So you guys get the idea here. You guys get the idea. It's a wonderful strategy to use, especially if you're newer, because it's very simple to look for. And yeah, so let's talk about a few other things here, guys. First of all, it's also very, very beneficial to mark key levels, because you will notice that this strategy, the trades happen at key levels, right? They happen at key levels. For example, the short that I took from up here, the short that I took from right here, right? If we just take our fib retracement tool from the top to the bottom, we can see that we're rejecting right off our Fibonacci 618 retracement. And again, the long trade that I did take from, where do we, oh, the long trade, the setup that I gave live on the VIP stream, we had come down to this very important daily and weekly level of support right here. So you know where to be looking for these things. It really can help a lot, because what you can do is you can do your analysis in the morning, set your alerts for when price is getting to a key area, and then you can just look at the chart and see if you want to take a trade or not. Like, for example, you know, last night we had this trade right here, this short trade, right? We had come up to a key area of resistance and take the short, right? And so what we do is before we even get there, we're looking at the level. And of course, price pumped up a little bit higher than I was expecting, but it's the point is the level was there, and we know what we're looking for at what level, so that we're not like caught off guard, right? When I gave the setup, right? Let's get back to it. Yeah, when I gave the setup, we had just pumped like crazy, right? This is a 12-minute time frame, so it's not too long ago. We had this massive pump, and then we keep making higher highs and higher lows. People are feeling very not so dumpy, let's just say, right? They're not feeling very dumpy. You really have to trust your indicators for this. Now, whoa, I've got all my technical analysis and juicy stuff up on the chart. For this trade setup, you can zoom in into a lower time frame to get extra confirmation. So when did I enter the trade? I entered the trade right here. And we can see on the 12-minute time frame, things are starting to look divergency, right? The red dot had not confirmed yet, right? When I entered the trade, the red dot had not even come close to confirming. I simply just saw that the momentum waves were getting lower, right? Let's take a look at what I saw, because it wasn't, you know, in hindsight, it's always easier to do this, but in the present, what is happening here? Okay, this is what we see. We see a massive blue candle. We see that we just had a massive pump. We see prices making higher highs all the time. Why am I looking to short here? I'm looking to short here, one, because we came to a key level. And two, because I see what's happening on my indicators, right? I can see that even though it's not confirmed even close, momentum and money flow is getting lower, okay? Now, if we zoom into, let's say, the 6-minute time frame, now we can get more clarity to see that on the 6-minute time frame, money flow is actually getting even lower, right? And then we can even go to the 3-minute time frame and see money flow is really getting low over time on the 3-minute. Look at this, right? It's about to cross purple. It's about to cross purple. And even though locally we are seeing higher momentum waves here, we still know that as long as we don't print a momentum wave above this one here, it's still a bearish trigger wave, and it's still going to potentially lead to a move to the downside, especially with that money flow. And then stick to the plan is literally, once you're in that position, don't flop and grope. Stick to your dang plan. If you see that we have put in the high, okay, and let's see where we actually put in that high. Okay, so we put in our high. I guess we put in our high right here. Now you know my entry was pretty crappy too. It was like down here. It was like 42.2 or something, right? My entry was pretty dang crappy, but I know I'm just going to put my stop loss above the last high because I am banking on the fact that we did get our divergence and our money flow is coming down. And so I'm just going to stick to the plan. And if my trade's in drawdown for a while, I'm using good risk management, so it's going to be all right. In this little range that we've been trading, we were able to long from right there, short from right here, take a short from right here, take a long from right here, take a short from right here, and take a long from right here. And these are trades, guys, by the way, that we do post in advance in the VIP Discord. Now, this is not the VIP Discord. This is a pair of uneven butt cheeks, which we will get into later. But if we do come over to the Jason Casper Discord, the VIP Discord, we do post trade setups here in advance based on technical analysis. And these trade setups oftentimes, when our confirmations get confirmed, we get our move, right? So that's how we were able to take a long from right here. And also, as we're actually in that trade, we're able to look ahead of the game and see that we want to take a short from 51880. We come up to literally 51891. All right, so we're $3, our entry is $3 lower than the high right there. Take a short all the way from down here. And again, these are trade setups we give in advance, but I realize that not everybody has the time to be doing analysis this detailed. And so I'm going to be going over 4 of the juiciest trading strategies. Okay, 4 different variants, pretty much of the same thing. Now, the only thing you're going to need for these strategies is, number 1, you're going to need TradingView. And I recommend, honestly, guys, having a paid TradingView account. If you're going to do this, if you're going to trade, okay, I recommend having a paid TradingView account because this is something that can make you a lot of money. You might as well invest in it. The second thing you're going to need, the way I trade, is an indicator called Market Cipher. Okay, you don't have to use Market Cipher. There are other indicators out there, but for me personally, I like Market Cipher better than any other indicator out there.
I've tried them all. Oh, I can't say I've tried them all, but this thing, the way I have learned to use this over time, it has totally changed the way I am as a trader. So that's kind of what this is going to be based on. Okay, so the first trading strategy I want to talk about is called the 1H DIV strategy. Okay, now this variant here is a trading strategy. Hang on, let me take another sip of coffee. This trading strategy right here, okay, is called the 1H div strategy parenthesis 12 end parenthesis. This is a very basic trading strategy that I feel that most beginners should start trading, because what this is going to do is it's going to give you a very good risk to reward ratio, meaning you will be able to potentially get a lot of percent gain from this strategy while risking very little. And also it has a very high win rate. Okay, you can go back and back test this for yourself, but this trading strategy does have a very high win rate. And the reason why there's the parenthesis 12 is because I like to use this strategy on both the 1 hour time frame and the 12-minute time frame. Okay, and what we are going to be doing on the 1 hour time frame is we're simply going to be looking for divergences. Okay, what is a divergence? A divergence is, and if we go back to the Discord here and we take a look at what we saw when we got our entry, right? We gave the setup over here, and what were we looking for? Okay, this was actually the reason I bring up this specific trade right here is because we were doing this on the 12-minute time frame, and I like to use this strategy on the 1 hour. That's why we have the 1 right here. And I like to use this strategy on the 12-minute time frame. That's why I have the 12 right there. And what we want to see is this can work for longing and shorting. If we see price is making a lower low and we see momentum is making a higher low, this is called a divergence. Okay, now if you are on this channel, you know that I call divergences uneven butt cheeks, right? And the reason I call them uneven butt cheeks is because uneven butt cheeks are when you, that's what market Cipher B looks like, right? That's what market Cipher B looks like when we are, when we are getting a very low wave on market Cipher B and then we get a higher wave. It looks like a butt, right? This is cheek on the left, this is the cheek on the right, this is the butt crack. And so when price is coming down and momentum is coming up, forming that uneven butt cheek pattern, that is called a divergence. And when we get that on either the 1 hour time frame or the 12-minute time frame, at least 90% of the time, there is going to be a good trade you could take. The most recent 2 shorts that we could have taken here and long, check this out guys, in just the past few days, while Bitcoin was consolidating and trading in this range here, we could have, take a look right here, we got a very clear price made a higher high and momentum made a lower high. This is a bearish divergence. We can see we had our left cheek and our right cheek, very uneven guys. Okay, I saw this happening. I was out and about, okay, out in the boardwalk, and I looked down slightly and I was like, oh my goodness. I pulled out my phone, I opened up Bybit, and I entered right into the trade because I saw her walking right in front of me. And look at that guys, from the time that we get that uneven butt cheek on the 1 hour time frame, we come down about 2%. Okay, that's a great day trade, scalp trade strategy. It takes us 1, 2, 3, 4, 5 hours. We've been in that trade for 5 hours. That's a pretty typical day trade, scalp trade, an elaborate scalp trade. Then the next opportunity we have is right here, where price makes a higher high and momentum makes a lower high. Okay, now literally again we enter the trade, and this is actually a short I did take simply because we didn't even come up to a level of resistance. But when you see the uneven butt cheeks on the 1 hour time frame, that is no joke. And from that time I didn't enter until somewhere, I think around like 51 point something like this. We've come down from there 3.5%. That's a very good trade. And then earlier today, what do we get? We get price making a lower low. We get momentum making a higher low. And we can see that from that point, we have come up a nice 1.69%. Now, these are trades we could take, very profitable trades, literally 3 trades since December 23rd. It's currently December 26th. So in the past 3 days, we would have made 3 trades, all very profitable. Okay, you don't want to mess around with those uneven butt cheeks on the 1 hour time frame. Now again, a few days ago we were able to take the short from right here in the Discord. We come over here, We go to the VIP TA. And guys, these strategies, they don't really take much analysis, but if you mix technical analysis with this, then it can be very, very profitable. So we're in here, we're looking for a short, right? We're looking for us to come up to the golden pocket, but most importantly, what are we looking for? Uneven butt cheeks on the 1 hour time frame. Okay, that's how we are able to short from right here, because what did we get on the 1 hour time frame? Look at this, guys. Price comes up, momentum comes down, uneven butt cheeks. We got ourselves a very nice left juicy cheek, a not so juicy right cheek, right? That's the thing. Price is pumping, guys. It's a party. We're at the club. We're at the club, right? You're doing your thing, girl. You're out at the club, right? You got a drink in hand. You got the TV on. People are over there. All of a sudden, it's a party. When you see this, party's over, guys. Party's over. That's how you know we're going to come down a little bit. And look at this. From that time, we did come down a very nice 3.5%. And this is something you can look at in advance, right? And say, okay, if we're farting some uneven butt cheeks here, then I will look to take the short. And what do you know? We come up into that same area. This is the 4 hour, but we did get the uneven butt cheeks on the 1 hour, and we dropped from there, right? You can go back and backtest this strategy, and even if you don't know anything else about technical analysis, this is a very powerful trading strategy that works very well for beginners if you have the indicator market cipher. Now, this is not going to work on the McDonald's. This is not going to work on the RSI, because the RSI and the McDonald's are not going to give you these types of signals, right? The divergences are not as accurate on those types of indicators, all right? That's why I prefer market cipher. Now, check out this, guys. Check out this one right here. This is a little bit more difficult to see, but very clearly, when we took the long from right down here, okay, we could see that we were very clearly getting a very misshapen butt with 3 cheeks, all right, 1, 2, 3 cheeks on market cipher B, okay, on the 1 hour time frame. This was a trade setup that we gave in the Discord in advance, looking for that exact thing to happen, because if we take a look at the setup I gave here, look at what we were seeing. We were seeing the uneven butt cheeks forming here on the getting a phone call over here on the 1 hour time frame. Okay, we see the uneven butt cheeks forming. We're waiting for price to come below the previous low, right? Because it's not an uneven butt cheek unless price comes lower, and then from there we get the juicy bounce, right? We get the juicy bounce. Hang on, guys. We get the juicy bounce right from this level here, right on the 618. But even if you didn't know this was a golden pocket, you still could have gotten that move just based on the 1 hour divergences. Now, I want to talk about the 12-minute variation of this, okay? Because the 12-minute variation is also very powerful. If you want to catch the exact bottom of something or the exact top, looking at the 12-minute time frame and down is a very powerful variation of this strategy. All right, let's go to the 12-minute time frame. And what we're going to do, right, is we're just going to be looking for uneven butt cheeks on the 12-minute, and we're going to see how juicy these cheeks can be, okay? We're going to see how juicy these cheeks can be. Now, look at this right here, guys. Look at this one right here. We got ourselves a very nice lower low, and we got ourselves a very nice higher low. And look at that, like as this thing is forming, we are able to catch the exact bottom right here, okay? And then again, we can see price making a higher high. We can see momentum making a lower high. And yeah, it's not the biggest move in the world, guys, but if you are a scalper, you could still get a nice 0.4% move. Now you might say, Jason, 0.4%, that's nothing. That'd probably be a loss. And you're probably right. And that's going to get into something else that I don't have time to get into in this video. But really, if you're going to be trading on a lower time frame, you need to be prepared to take losses. That needs to be part of your trading strategy, which is why you need to have implemented something called risk management. Now, if you do want to learn how to trade the full way I trade, where we're looking for levels and not just using market cipher. Market cipher is wonderful, but trading with just market cipher is like, in my opinion, driving. And this is just my opinion, guys. Some people trade with just market cipher perfectly fine. But for me, trading without technical analysis and only using market cipher is like driving with really blurry vision. The technical analysis is like putting on glasses. But you will notice many times, especially if we're coming to a very clear area of support or resistance, that you will find that the 12-minute butt cheeks are super powerful. Now, I need to make this caveat. If you are brand new to trading and you don't know how to draw support or resistance, right, then I recommend sticking to those higher time frames. I recommend sticking to the 1 hour. I recommend not going down to the 12-minute time frame. The 12-minute time frame is way more powerful if you know some basic support, some basic technical analysis. That's where that 12 minutes really going to be powerful. For example, okay, the absolute low of the move that we got from right here, this is the long that we did take in the Discord. But because we knew that this was a very important level of support, then we can take the 12-minute butt cheeks much more seriously. Okay, look at this. Look at this. We've got ourselves a 12-minute uneven butt cheek pattern right here. And this literally was the exact low of the entire consolidation that we put in, not including this massive wick right here. This was the exact low. And so I was able to long the exact low because of the 12-minute butt cheeks, knowing that it was a level of support. Okay, but also if we take a look at the exact high where we did also take a short from, we can see that we indeed did have the 12-minute butt cheek pattern there as well. And so basically just two variations on the same thing, guys. The 1 hour is better for beginners. The 12-minute is better for people who know a little bit of technical analysis. And really it can be simply just knowing a little bit of technical analysis, right? Right here, as we come right into our level of resistance, that's where we get this. This is not even a butt cheek pattern. This is more of just a general divergence over time, right? Okay, so that's strategy number 1, guys.
Are you looking for a simple yet powerful trading strategy that will allow you to take a long from the exact bottom like this, or like this? Well, my friend, you have come to the right video. I'm about to show you the very simple strategy that I use to take trades like this all the time. So make sure to like the video, subscribe to the channel, and click the bell for notifications, because you are not going to find this juicy content elsewhere on YouTube. This is going to be a 6-minute strategy. Okay, a 6-minute strategy. People ask why the 6-minute. Don't worry about why. The 6-minute is the time frame that will work best for the strategy, and we are going to be using an indicator called Market Cipher. Okay, Market Cipher is my favorite indicator to use in TradingView. It will give you information that no other indicator can give you in TradingView, and it can give you information that you would need to spend a lot of time and a lot of study to find out in any other way. So what I'm going to be looking at on Market Cipher is two specific things. I'm going to be looking at the momentum waves, and I'm going to be looking at the money flow. And those are the two things that I'm going to be looking at. As you can see, I have split my Market Cipher up into two different indicators, right? In order to do that, you're going to just load Market Cipher B twice, and then click the gear, and you can check the things that you want on. Now, again, I don't usually separate my Market Cipher, but for the sake of this strategy, we are going to be basically separating them so we can see the signals more clearly. So what is the strategy? Is basically this, guys. We are going to be, first of all, understanding key zones of support and resistance. All right, this is so important for any trader to know. Support and resistance is the bread and butter of every single trader. What is that? What is support and resistance? Support and resistance is basically historically any place that price has found a sticking point. All right, so when we're looking at a chart, we can just draw out with our eyes zones of support and resistance and say, okay, this is a key level because price found resistance here once, resistance here twice, 3 times, 4 times. Now we break out, so we would look to this level as support. And we could say also down here, this is obviously going to be a key level of support because price found resistance here once, then we found support once, support twice, 3 times. And so we know if we come back down to this area, we will be looking for support once again. Now, this is a very simplified version of finding support and resistance, but this is really all we need. Traders have the propensity to overcomplicate their trading, and the more we can simplify it down, the better. We don't need to overcomplicate things unless you're trying to be a ninja scalper or something like that, which is very fun, but it does take a little bit more skill. We don't need to overcomplicate things. And if you want to learn in-depth technical analysis, now, yeah, I was about to shill my paid course in that original video, but this is a free course, so no need to pay. Go back and watch the dang playlist of the free course. Also, make sure to sign up to ANTARCTIC Exchange, best dang exchange in the world. Here I am in 2 Bitcoin juice. juicy long trades, 0% limit order fees, 0.015% take order fees, completely decentralized exchange. Everybody on the exchange owns the exchange. You get paid in liquidations and fees. It's great. Also, if you want to join the Casper Crew VIP Discord, where we give the juicy trade setups in advance, like the one that we gave right from 86.5, currently up right now, $35,000 in profit. You can go to jasoncaspertrading.com, click the link to join the VIP Discord, y'all. Once we have our areas of support and resistance marked out in the chart, that's where we are going to then open up our indicator and tell ourselves, okay, if price comes to one of our areas of resistance or support, we're now going to be looking for two things. We're going to be looking for a divergence. What is a divergence? A divergence, guys, is when price and the momentum oscillator do the opposite. So for a great example, if we see that the price is getting higher, like it is right here, right? We can see that the price continues to get higher, but we see that the oscillator continues to get lower. This is called a bearish divergence. Why is this a bearish divergence? Because think about it. If money is leaving the asset, yet the price is getting higher, what does that tell us? Unsustainable move, and there needs to be a correction, right? There needs to be some kind of a correction. And the opposite is true for bullish divergence, right? If we see that the price is getting lower here, and yet we see that the, let's say, for example, here that the momentum had gotten higher, that is a bullish divergence, right? So we're basically going to be looking for divergences with momentum and money flow at the same time. And we're going to be doing this on the 6-minute time frame, okay, on the 6-minute time frame. So let's see here. We're going to go back in time and look for every single time where we did get a divergence with momentum and money flow. So just in the past few days, we have had multiple trades we could have taken using this strategy. For example, right here, we get a big move to the upside. And when we take a look at our oscillator, we are seeing that we are printing lower momentum waves, and we see that we are printing lower money flow over time. Now, look at this also. It's very important that we know where do we actually take the trade from, because we could see the higher price and the lower stuff happening before we actually get to this level. But it's very important that we wait for price to actually come to the level of resistance or support that we have marked out. That's where we're going to always get the best entry. Okay, now we see it again when we come down to the low of this range right here. Okay, this is one of the trades that we actually took in the Casper Crew VIP Discord. In the Casper Crew VIP Discord, you know, we're looking for these levels all the time. In fact, just recently, you can see here in the Casper Crew that, you know, yesterday we were looking for a take profit from the short we were in and a bounce from this key level right here, the golden pocket VWAP value area high point of control at around 3,200, and of course that level did not disappoint, guys, because we got our bounce right from there. Not only did we get our bounce right from there, but we also got a massive pump from there. And this is basically what we're looking for in the Casper Crew, where we post our trade setups every single day, our levels every single day. We post levels, we post trade setups, we give confirmations, what we're looking for. We do 3 live streams every single day. And by the way, if you want to join the Casper Crew, you can go to jasoncaspertrading.com and click the link right here. It's not a signals group, guys, but it is a technical analysis group, and you will learn a bunch in that Discord. So look, once again, price is making a lower low, but now we see the divergence price, the momentum is making a higher low, and the money flow is making also a higher low. So what did we do? We literally shorted the exact top and longed the exact bottom. And guys, this level, by the way, this exact bottom was a level that we gave in the Casper Crew, like to the exact dollar. I'm not even kidding you. Look at this entry right here, right? Is that not the juiciest entry in the world? It's because we had this level marked out, because we were doing our technical analysis as all good traders should do. All right, so that is what we're going to be looking for. And then let's see if we can see any more trades that we could have taken here. Now, check this out, right? We come back up to our area of resistance here. Let's see if we get any trades, okay? So we're looking for right here. This would have been a no trade because we don't get both divergences. Then we are looking for up here. This actually would have been a trade to take from this area, okay? This would have been a successful trade where we could have gotten a move to the downside of about, you know, about 0.8%, which is absolutely acceptable for a scalp trade. Let's see where else we could have taken a trade from. We could have taken one literally from the exact top of this move as well, guys, just by looking at the fact that we're making a higher high, but the money flow and the momentum waves, very important, they have to be both, are making lower highs, okay? This trading strategy is so simple. And people, I guess, you know, some people, they don't like simplicity. They think it needs to be complicated. They think it needs to be hard. You got TA snobs out there that are like saying, no, you know, it's too simple. You got to overcomplicate it. You need moving averages. You need Elliott waves. You need market profile and order flow. And you need all these different things. No, you know, the more you can simplify your trading, guys, the better, right? The more you can simplify your trading, the better. So let's talk about risk management, because again, every single strategy that you use to take trades, if it is not combined with a good risk management system, you are going to lose money. I could literally tell you the exact top and the exact bottom of every move, and you would still lose money if you didn't have a risk management strategy. Why is that? Because risk management gives you three things, all right? It gives you an entry, clearly defined, which is our support and resistance level. It gives you an exit if things go against you, which is your stop loss. And it gives you an exit if things get for you, which is your take profit. Okay, it's very, very important. Why is it so important? The reason why it's so important, guys, is because if you do not have an exit strategy, you could hold a win into a loss, or you could hold a loss into more of a loss than it should be, right? Which is very, very key. Hang on, I do have to check something on my phone real quick, guys, because New York has just opened and I need to close a trade that is in profit, and I don't want it to turn into a loss, right? If you are new to trading, you need to get your risk management down on point, because that is the most important thing, even more important than having a strategy. So here's how we're going to manage our risk, right? Once we see that divergence, what we're going to do is our stop loss goes above the last high, right? So our stop loss will always go above the last high. Right? For more information on position size and risk management, make sure to check out the course, because we go into extreme detail. What I like to do, guys, when I'm scalping on the 6 minute, is I take half the trade out after a 0.5% move, and then I hold the rest and take profit along the way down. What this does is it ensures a win. Oh, and after I TP1, I always move that stop loss to the entry as well. Right? Basically ensures that I'm winning, but if the trade is going to run, it will run. And let me tell you, most of the time, when you get this signal, the trade will run. The money flow and the momentum waves, the trade will run. So that's how I deal with the stop loss and the take profit. TP1 at a 0.5% move, 50% stop loss to entry, and then I will take profits along the way down to the next support. If I'm shorting, the opposite is true for if I am longing, right? I will put my stop loss below the low. After a 0.5% move, typically, it will change depending on the context. Half the trade out, stop loss to entry, and then set TPs along the way up. And if you want, you can let a little bit of it run, right? That's literally what I have done for some of these scalp trades that I am in right now, right? I mean, you can see, for example, this trade right here, you know, I had a much, much bigger position size. It was over $100,000 worth when I entered it. Now it's like 30-something thousand dollars. I'm letting a little bit run in case we go straight off to Pump City. But let me tell you, I was taking profits on this trade when we were down in this area, right? So guys, that's it for this video. I hope you found it very helpful. Make sure to like, subscribe, click the bell if you did. May God bless everybody in the name of Jesus, the Messiah. Even if you're not super religious, I hope everyone has a great weekend, and I'll see y'all in the next video. Peace!